Now to our guest speaker for today's program. Our guest speaker is the immediate past director of the Securities and Exchange Commission, SEC. Until his appointment, he managed his private firm of financial consultants and investment lawyers, and he was also a partner in a firm of chartered accountants. He worked as a director of corporate finance and investment management at SEC from 1999 to 2003, and as a director of fund management and investment at the National Health Insurance Authority. He had also worked previously at the Ghana National Procurement Agency, where he held various positions. He served as the lecturer from 1993 at various institutions, including the Ghana School of Law, Central University College, and the Ghana Institute of Management and Public Administration, and the National Banking College. He also served as an instructor for Ghana Stock Exchange Securities courses and as a resource person for the West African Institute for Economic and Financial Management, Nigeria. He has several publications on finance and corporate governance to his credit. He studied at the University of Ghana Business School, where he obtained a BSc Administration degree and an MBA degree. He also studied for professional examinations of the Institute of Chartered Accountants Ghana and qualified as a chartered accountant. He further studied at the School of Law and qualified as a lawyer. He has also obtained his Doctor of Business Administration degree at the Paris School of Business in France. The next voice is a cornerstone in Ghana's financial regulatory space, a leader whose work ensures structure and sustainability in our market. Ladies and gentlemen, distinguished guests, please join me in giving a resounding welcome to our guest speaker, the past chairman of Securities and Exchange Commission, Dr. Anane Antwi.
I think I have to move a motion to amend the statement that was made. Some amendments must be made. I'm the current chairman of the Securities and Exchange Commission. And I'm not a past director general. Somebody has come after me. So the immediate past one is the Daniel Ogbani, my mate at the School of Administration. I always call it School of Administration. It will take a long time for me to stop that, yes. So I'm still a former Director General of the SEC. I'll be doing, my speech will be in the form of presentation, but before I move on to the presentation, let me share a few things about investor education, which has been something that I have been involved and I cherish, and I will keep on doing as long as I have the strength to do. I work at the SEC. Before I even worked at the SEC in 99, I was teaching at the Stock Exchange. That was where people were wondering why I was a chief accountant at GNPA, Ghana National Procurement Agency, and yet still teaching at the Stock Exchange. They didn't understand why it should be so. But it was so because after my MBA, I finished my MBA in 1992. When we were working on our MBA, Stock Exchange was not here. It was there at that time that Stock Exchange was being promoted. So they were teaching us in the sky, moon. You know, there was no Stock Exchange for you to feel it. So when I finished my MBA and the Stock Exchange has commenced work, I think it was 93, I decided to go to the Stock Exchange and learn. So I went through the Stock Exchange courses after my MBA to see the practical issues about Stock Exchange and investment. Then 94, I was asked to start teaching on the Stock Exchange. So I taught at a stock exchange for about 5.5 years before now moving from ordinary finance business now into the securities market, because people were wondering when they would say, where do you work? You say, GMPA. You have all these skills in the industry and you are not working in the industry. So I had to now come to the industry. So after working in the industry from 1999 to 2000, late 2003, I went into some consulting. And that is where I started doing some projects for investor education properly. You recall that government did financial literacy program somewhere in 2008 or 2000. I got a consultancy from Speed. They used to call them Speed. It was a German GIZ. That was the project I worked on. And anytime I have finished and I send it to the Speed people, they say, oh, Chief, break this thing down again. They wanted me to do the material. I said that as soon as anybody pick, he can understand. So that was a difficult aspect of that. But I produced that material. Then the next year, I was asked to produce another material on micro insurance. So I did that too for GIZ. Then again, I got a project to do all in education material, prepare education material, and that was from the Ministry of Education to try and include some financial literacy or education materials in the SS, how do you call it, that 2009 SS, their course. So finding a place to put some material in the senior securities course was also another problem, because the program was tight everywhere. But I worked with an educationist. The two of us were the consultants for that project to put some small financial, materials in the SS. I think it was put in the life scale. I've forgotten which subject we added, so because there was no way you could create another subject for financial, so you have to find where to put some, and that's why I have to work with the educationist, because he will know where is it that we have to put. So that was some two big projects that I did involving education, investor education, and financial literacy. So when in 1999 I went back to the SEC, that was something that I said I must continue. Now I'm no more the consultant. I'm now at SEC. So you recall that we have to do so many things at SEC on investor education and financial literacy, including what Joshua said, establishment of the Financial Child Finance Club. We had a website for Child Finance Club where you can go there and the children will work on something. The other time I asked whether Child Finance Club, tried to Google and see if it's there, but I think it's dead. It's gone. But that was the beginning. And then we went on to do this quiz for senior secondary school, which has now become what you call the national quiz. That was the start of. And so we've worked with Joshua, encouraging him to do some of these things, while the SEC was also doing its part. So investor education and financial literacy, I'm passionate about that, and that's why when I was leading people on the DDEP, I always complained that they interview me. I say, my worry is that I have educated people on investment, and they have grown to know investment, and they have invested. So if their investment is going through troubles, I should be, if nobody will talk, I should talk, because they say, you taught us we should invest. Now we have invested, and we are having challenges. So if you see me doing that, know that I'm coming from where I'm coming from. I see If you have educated people to be investing and now they have problem, then step in and help them, so that the next time when you are talking about investment, they will say, even if we invest and there is problem, we won't get anybody to help us. But at least they will say there may be somebody to help you go through that. So investor education is key. Financial literacy is key to me, and I will always be around to support. So as I said, I will do a presentation. I'll call it Investing for the Future. Do you have something I can control from here? If not, then go on from there. What is investing? Investing is using your money to buy financial assets like shares and bonds to increase its future value. Or to say it's another way, it is putting your savings to work for your money to grow. And before I move, let me tell you my own saving story. When I was moving from my village to Accra in 1975, I had sent already 70 Ghana cedis, 70 cedis, not Ghana, 75 or 70 cedis. What will be the value today? 70 cedis in 75. I've sent that for my senior brother to keep, so that when I come to Accra, at least I have some money with me. And when I was finally coming, I had another 30 cedis. So I got 100 cedis. I came to Accra July 75. I was a middle school leaver. I came to Accra to find job. Fortunately, I got job in September as a factory hand, working in industrial area. I didn't spend the money I brought. I didn't spend it. So when I got job and I started receiving salary, then I realized that that 100 Ghana cedis is something that I can put in savings. So I went to, at that time I didn't know anything seriously about savings. But at least I heard something called Post Office Savings Bank. For those of you who are above 50 and go to 60, you should know Post Office Savings Bank. Last time I went to Post Office and I was asking I saw financial services there. And I said, are you still doing the savings? But their financial services is different. They no longer do. But the UK, the Post Office is still a savings bank. So I put the money in Post Office Savings Bank. A small. At that time, when you want to withdraw, you must give notice. You know, I think 2 weeks notice is required before you go and withdraw. They give you interest. So every month when I get and I was receiving 2 cedis a day. That was minimum wage. I've received minimum wage before when I started working. Minimum wage was 2 cedis in 75. 2 cedis now it will be what? 75 2 cedis will be what today? Can anybody work it out with your it will be about 0.02 of 0.002 of a CD. But that was the minimum wage in 1975. And when I'm I'm teaching a student, I say the concept of income less expenditure is equal to savings. If we continue to do that, there will be no savings, because your expenditure will always be more than your income. Save some few people whose incomes are more than their expenditure. Otherwise, if you want to save, there should be your income less your savings. Then you spend the rest. So you make a conscious effort to save. Unfortunately, people are not saving. Anytime I've gone on teaching investment and preaching, I say, Ghana here, people save when they are about going on retirement. If you call people who are working, you won't get about 5% of them doing savings. And when you ask them, they say our money is too small. Our money is too small. I say your money is not too small. Make a conscious effort. But as you are approaching your old age, I believe you will stop buying shoes. I believe you will stop buying shoes. I believe you will stop buying all these things, because that's time you realize, hey, something is going to happen. I'm now 50, I'm moving to 55. I must prepare for the battle ahead. So you stop those things, and then that will free some funds for you to what? To invest. So it has become our habit. It's only when we are growing that we realize that, look, we have to. It's just like when you want to build, and you start buying the blocks, and your wife demands something. The first you say, hey, I just well say, you started down. So the things that your wife wants, you say, no. Now that we have started this building, we can't be spending on that. But if it wasn't for the building, you were happy to spend. So that is how it is. It's like your future. When it starts facing you, then you realize that because of this, I won't spend my money on this. I won't spend my money on that. All of us have gone through. At some point in time, when I was at GMPA and I became the chief accountant, before I got appointment, I've prepared myself properly. I said, every day I will wear a new suit. So if you come, I had suits that can take me for 1 month before I repeat you. Young man, I've struggled through education. You see, sometimes I have to also, because I never attended secondary school. I didn't go to, I studied in the evening part-time, to do my RS62, RS63, GCO level, or evening studies. Do ACCA and all those things. Then now I am, I've have my BSc, I have my MBA, I'm a chartered accountant. I have to also see that, look, I've also come. All my suits, I have distributed them. But if it wasn't for the law that I've added, I wouldn't have any use for suits. But because of the legal profession, if I'm going to court, I must be in suit. Otherwise, so these are some of the things that you do, unconsciously. They were all those things. I could have saved those monies, but it was time. But I'm saying that it will come to a time that all those things you may not need, so you will not even be spending money on that. So that is savings for you. You put some money down. So saving is setting aside money for use at a later time. Investing is using your savings with the expectation that it will generate increased income or grow in value. So your savings is just putting something down. But when you invest it, then you are growing that your savings. There are 3 main reasons to invest. You can beat inflation, that is maintain the value of your investment. If not at all, at least some of the value will be restored. When some of us were investing, I think I've taken 60% on my investment before. 60% per annum. Do you believe it? You don't. We took 60%. And that was when the Kofi Amoabin was operating his company. It was what UT. Yes, it was. If you later that it became UT, it was previously some unique. Yes, you know. I was teaching with Kofi Amoabin on the stock exchange when he was getting license, and he told me when he get a license we should team up and do that, but that didn't work. So I was investing with him. We had gotten 60% before, And you see, at that time I had even 100,000 and I was earning 60% and I was rolling it over, I should be having a plane by this time. You know, that was huge amount. Within 10 years, you would have gotten the small money, you know. And at that time, Treasury bill was at 45%. In fact, I was teaching on the stock exchange, so these are the figures I was using to teach. And that's what the time people were also earning 360% per year. You know that? They were earning from where? Piram. Piram was giving 360% per annum. And my students will ask me, Chief, should we go there? I say, well, don't go, because it is highly risky. But if you want to go, then as soon as you go, pray hard for at least the first 3 to 4 months that nothing should happen. So that you got what? You get your money back. Because 3 months, 90%, you've gotten it. So if that nothing even comes, at least you have gotten 80% of your. And I needed money, but there was no way I would go there and take that 360%. But T-bill was giving 45%. At that time, they say inflation was 70. Some people say 72. But I think government accepted 70. So even that 70 minus 45. So we couldn't beat inflation. Those of us who were earning 60, at least we had 10%, loss. So you beat inflation if you are, but at least if for nothing at all, you redeem part. But if the money was there, it means the value would have eroded by 70% without any restoration. You can achieve your financial goals, for example, buy a house, and you can ensure retirement income. Yes, next slide. There are types of investment products: fixed deposits, that is the money you put with the bank or financial institutions. 3 months, 6 months, 1 year, fixed. They give you fixed interest income. Your income is fixed. The time that you want to take, you go and take. So fixed deposit, treasury bills and treasury notes that are issued by the government. The treasury bills are the ones that are below 1 year, and the notes from 1 year. And now we have some lengthy notes. Previously, we didn't have more than even 3 years of bonds. And some of us were privileged to work with a committee that we call the Bonds Market Committee in those days. We recommended that government should issue some long-term debt instruments so that the market can also be guided accordingly. Otherwise, at that time, the only 5-year instrument that had been issued by the government was what we call the Ghana Stock Exchange Commemorative Stocks, which was a 5-year. Otherwise, everything was 3 years, 2 years. So government bonds or treasury bills, then corporate bonds, those are the ones that are issued by companies. We now have mutual funds and unit trusts, which was promoted by the SEC. Is now doing wonderfully well, I believe so. And when the SEC came, there was no mutual funds. And the department that created for me to run was the department that was supposed to promote unit trusts and mutual funds. So I have to go for training in the UK to study how to develop mutual funds and unit trusts. Now it has come. Everybody understands it. Unit trust, you go, you buy the units. Mutual fund, you go, you buy the shares. The mutual funds will be our companies. The unit trusts are just an arrangement to trust. They are not companies, so they don't issue shares. They issue you with units. I believe you all know some of the unit trusts. HFC was the first one that started. SEC hasn't come at that time. So they use an executive instrument to establish the HFC unit trust. Then when the SEC came, we have to license them under the law. Mutual funds, you have so much of them. Carl, and I think the Data Bank and Fund, those are the mutual funds. Then we have shares that many of you know, those that are either listed on the stock exchange or traded over the counter, or not even traded. Some shares nobody would trade because privately they are holding it. Those are shares. But the various types have various levels of risk. And the higher the risk, the higher the returns, the higher the risk, as I said. That is why Piram and R5 were given 360 per annum, 30% per month. And people rush there with their money. People who have gone to school, big schools, they still went with their money to the place. And when it happened, everybody knows what happened. Yes, next slide. Your position as an investor, if you invest in fixed deposit, you lend your money to the financial institution. If you invest in treasury bills or government bonds, you lend your money to the government. So go and give money to government and tell government, you owe me, I have lent you money. Yeah, small boy, but you have lent government money. Is it not nice? The if you buy treasury bill or government bonds, you have lent money to government. So this big government, they use small boy, you are giving your money, to government. So when you buy government bonds, you have lent your money to government. When you invest in corporate bonds, you have lent your money to that organization. And when you invest in the unit trust, you become part owner of the investment of that unit trust. If you invest in mutual fund, you become a part owner of the assets of the fund. If you invest in shares, you become a shareholder and a part owner of the assets of the company. So any investment that you do, you have a position. If you own shares, you are a shareholder. The company doesn't own you. You are the company. You are part of the company. When they started these rural banks, those who bought shares, that time we have to preach before people buy the rural bank shares. When the people buy the shares, they go to the bank and they say, I want loan, because you are giving loans to some people, you are not giving me some. And you have to explain to them that you are not a depositor. You don't have money with us for you to say, I have money with you, so give me a loan against my deposit. You are a shareholder. But I believe these days, it's not clear, but still, they know that they are shareholders and their rights are different from people who are depositors. Let's move. If you want to sell your investment, yes, you can do that. You can sell part or all of your investment, either in bonds, shares, mutual fund, or unit trust if you need money. That's the good thing about investment. Even if somebody's money is with you today, you can invest it, and when he comes, you pull back the money and give it to him. You may have made some interest, Or there is a IPO. They are issuing shares in the primary market. You buy somebody's money. Maybe he has given it to you to keep for some 2 weeks or 1 month. He's coming for it. Hopefully, by the time the market opens, the IPO, the price would have gone up, and you would have made some money there. So you can sell your investment at any point. However, the time that it will take for you to get will depend on the market. That's why sometimes they say the market is illiquid. If you want to sell, you are not getting people to buy as soon as you want. So the length of time that will be taken to will be dependent on the state of the stock market. Yes. Yes, go ahead. Fund managers of mutual fund and unit trusts, they stand ready to buy your investment. The unit trusts and the fund managers, they stand ready to buy. If you go today, they must buy it for you. However, if there are problems, the SEC rules require them that they should within 3 days, or if a problem, they must tell SEC why they cannot give you back your money. Otherwise, immediately you say, I'm buying, they have to give you. And that's where we have a concept in the UK, which we dropped here when we were doing the mutual fund rules. After I've gone and I realized that the fund, the manager's box, manager, if you buy, you put it in your box. So that if you are selling, you sell from your box. So anytime the manager is buying, he buy and put it in the manager's box. Anytime you want to sell, you also sell from his box. We said, no, we wouldn't take that. We is selling to you from the main company or the units. So anytime you want, the manager will buy from you. If you want to sell, you buy from you. If you want it back, you sell to you. You can also, through your bank, redeem your investment in treasury bills before maturity anytime you need the money. Let's move on. There are institutions that are involved in investment. The banks are involved. The finance houses. Finance houses are those that are in the license by the Bank of Ghana to operate. They are part of the people we call the specialized deposit taking institutions. They take deposits, but they are not banks. Same with the savings and loans. Then the microfinance companies, fund managers, investment advisors. Fund managers are those who manage your funds, licensed by the Securities and Exchange Commission. Investment advisors also licensed by the SEC, but they don't take your money to manage for you. They give you professional advice. But the fund manager can give you professional advice and also take your money to manage for you, either as an individual agreement or as part of the funds that they are managing. Then we have the securities exchanges, which includes the stock exchange, broker dealers who will buy the products on the stock market. Then issuing houses, those are the financial institutions, mainly, especially banks, who help the companies to raise funds. Receiving agents are people who, when you want to buy the shares, they will say, go here and put your money, go and buy from that place. They will receive your money. Underwriters will be the ones that will underwrite the whole issue and make sure there is no failure. So if the shares or bonds are underwritten, it means every share is purchased. Then the underwriter will come to the market and sell, so that if he's not able to sell all the shares or bonds, it is not the company that is losing. With Ghana, we had the first problem of, I've forgotten the name of that company. It was it's not Camelot, is it? No, Camelot is. Some company came and couldn't raise funds. When you are raising funds, there's a minimum that you must raise before it becomes successful. Before the SEC was established, somebody has raised, he was teaching at the School of Administration. He had a company, he issued bonds, and he wasn't successful, but he kept the money. SEC was not there, so there was nobody to tell this man that, look, if you are not successful, send back the money to investors. Before the SEC, the governor of the Bank of Ghana was made the sole commissioner, but they didn't have the time to do any of these things. So when the SEC came, we had to chase. I know the man, but I've forgotten the name. We had to chase him to get the monies refunded to investors. So if you don't get the minimum, you must return people's money to them. And to avoid that, when they were doing the that second market, your market, what is it? The Ghana Alternative Market. I had assumed duty as a DG then. And the first time I met them, I said, look, there should be underwriting in this market. So, perfect. We don't want any small company to come and not succeed. First, you have spent about 5% of the amount you want to raise on capital raising, and you are unsuccessful. So there's a loss. So that small company that want to raise funds, it didn't get the funds. Or also I had a koboka. So I say this market, it should always be what? Underrating. You know. So when it is underrating, then you know that you are already succeeded. The rest is the matter for the writer to sell. And of course, he also makes some spread when they sell. Security depositories, like what you have, the central registrars, and other ones like nominees and others, which are also part of the players. Now let's look at the risk involved in investment. We are saying that every investment will have risk. And people have said that we should change. I still teach. I teach at the Ghana, University of Ghana Business School, Master of Development Finance. I teach on that program. And I also teach at the Master of Law and MA at the University of Ghana Law School. That side too, I teach financial market and investment. And there has been called that we should change the concept of risk-free, because now Ghana has proved that. But whatever it is, there is a level, you know. But this risk-free thing, seriously, it came from the U.S. The concept is from the U.S. government. That they say they are 90 days, they are 91 days, the short term will be always risk-free. The U.S. can borrow, but they won't die. But if you borrow, we will die. So that concept that risk-free, if we were using here, maybe we would have made a caveat, you know. But that risk-free thing, we should change it. But it's the same. 10 minutes more, yes. So risk-free, there is risk. But the levels of the risk. I always tell people, why do we say it's risk-free? Especially if you haven't gone through the long term. Everything long term has its risk, because you don't know whether the well will even be there by the time your money is supposed to be given to you. That is also a risk. Wouldn't they say, they go and give somebody money for 100 years. What is the guarantee that the well will be there in the next 100 years? When Christ has said he's coming soon, even though he has delayed. But he's soon, we don't know. If anybody say, wait for me, I'm coming soon, and for all these years he hasn't come, you will not be happy. But he can come anytime. So anything going into the future is risky. For example, if you sell things to people in the offices, you go and you give them, like the ladies, this gives, budget also ending. You are free. You give it to the person and you go home without thinking. But if you say, come and take it next 2 years, would you go home with the same mindset? As for next ending there, you think it will come by all means, ending will come. But next 2 years, you are not sure whether next 2 years will come. So that is why I say, if it's longer term, then the risk is increasing because of the term. But if it's short, fiscal we are free. Okay, so by next year, you think of something a bedroom next year, the same person you are giving the thing to him that you are happy to give it to him or her today and come for it next week. When the same person say come next year, you start thinking what? Hey, no, Master. Risk. So the longer the period that you are making the investment, of course, then the risk would be increasing. So investment has risk, and the risk is that you may not achieve the investment, the goals that you hope to achieve. Risk is the possibility of losing part or all of your money invested. It is a chance that the invested capital will drop in future in value. Yes, move on. Risk, all of these people have risk. But our immediate past experience of risk came out clearly in the financial sector cleanup. Closure of banks. The banks that you think you put your money there and the next day when you go, you get your money. Now the bank is closed. So the risk has now materialized. Then closure of fund management companies, which are still in problem. They have not been able to pay them back. Specialized deposit-taking institutions, they have created all these legacy issues. Then current distress ones. People are still distressed, we cannot. Yes. So you know what happens. You have followed it. People didn't want to accept the institutional investors. Those who accepted, they have gotten some investment interest rate cut. People were receiving 30-something%. Now they are receiving 10%. So the risk. Yes, go ahead. If you go to the foreign one, they brought in the power and the disco. If you receive the power, you are receiving 1.5 interest. Maybe first you are receiving 7, 8, 9. The risk is there. If you receive disco, those are the people who have gotten haircut. I've already been saying that haircut. It's only here that there is haircut. There was no haircut anywhere in the DDEP. Haircut is when your principal itself, the man say, I have taken 1 million from you, but I can return only 900 to you. That is the haircut. And when people were talking, I told my friends who were lecturers, I said, you are lecturers, so don't just be saying this, maybe, because there is no haircut. But the real haircut is came to the foreign one, where people have taken 37% haircut. You give 100,000 to government, and government say, I will pay you what? 63,000. 37,000 is gone. That is haircut. Let's go straight to go on and let's check something before we do some practical investing and the power of compounding. The amount can grow if you compound it. That is, if you leave your interest to grow. Let's do a quick one. Go to a website. If you are, go to the next one. Go to the next one first. If you are 30 years old now, go to this one. Let's say you are 30 years today and you celebrate the day. You say, I'm 30, so now I'm going to put 30,000 cedis down in investment. One off. But for the celebration, you are not going to do that. But because of celebration, you do that. You put 30,000 towards your retirement with rollover of principal and interest instruction to your bank. Yes, next one. Average interest rate. Now we are at 14 point something. Let's hope that will continue so that you are not getting the 20 and the 30 and the 40 again. Average of this. How much do you think you get when you retire? How much do you think? Can you guess? 30,000 when you are 30 years. You put it there. Say, I won't touch it. Roll it over. Interest rate 14.5 will continue for the next 30 years. How much do you think you get? Any guess? Go to that website. Go to this website. Always take this website and use. Go to that website. Okay. Initial investment, put 30,000 there. You are not going to add anything to it. This why it was just in celebration. That's why you put the money there. So no monthly contribution. Length of time will be 30 years. You are now 30 years. So 30 years for you to go on retirement. Estimated interest rate, put 14.5% per annum 14.5. No change. It will go on throughout. Go to the frequency. Quarterly. Take quarterly. Because it's a 91 year. Now click on calculate. It's calculating. What is there? If you are 30 now, I go and put 30,000 there and say you won't touch it. Roll it over at 14.5. By the time you retire, you are a millionaire. 2.15. This is no joke. So if you have your man, you are now 20, and we say you are going to put 20,000 there. Check 20,000 for us. I'm celebrating my 20th birthday, and somebody gave me 20,000. I'm putting it in treasury base. Put 20 there, and change the years to 40. And calculate. It's like story. And you are using your 10,000s to be buying phones. I always complain. Just use the 10,000 you used to buy the phone when you are 20 years. Put the 20,000 and let's see what value you are losing for holding that phone. 10,000. You are 20 years, so the same 40 years. Just check. And let's see. No, that is 40 years. You are 20 years now, so 40 years. And let's calculate. 2.9, almost 3 million. And when I go to the mall and I see you guys spending the money. They will say TV, they want the one with the internet. The thing is 35. And your man is buying TV 40,000 home. I say you are mortgaging your future. If I knew this, by this time I would have been, oh God. The only thing I was going to do was to pray to God that give me long life. Because I'm sacrificing today. If I die, then I will say I've lost. But that's why I cry when I go. I don't know whether I've lost. Because when you die, you don't see anything. You don't feel anything. So what loss? So, and because of our time, let's go to the conclusion. You will get that. You go and check it. If you like, go put even 5,000 there. And put your age. And see that by the time you are 60, what money would you get? Don't touch that money. So to the young ones, now that you have completed your education, some of you having completed or you have completed your learning, trade learning, look ahead and think about your future financial situation. Right now you may be thinking, I don't make enough money to think about saving, but you are using some money to buy. Even credit alone. If the credit you are bundle, you are just using to watch unnecessary things, that alone can give you money. Let me tell you, even small savings today can add up to big savings tomorrow for investment. It pays to start early. The longer period of time you have to save and invest, the better off. So when I go check 5,000, did we do 5,000? Let's quickly do 5,000. Let's do 5,000. 5,000 there, all of you have some. Many of you have some in your pocket. 5,000. Quick, so that I end. Go to the and put 5,000. This was 10. Just put 5,000, which is manageable by all standard. 5,000. You are 20 years. Want you be a millionaire? 5,000 Ghana cedis will make you a millionaire by the time you retire. Thank you.
Wow.